Good morning and welcome to July's edition of Millennial Hangout. And I tell you, today's edition, or this month's edition, is going to be looking at something quite interesting because as millennials, we have loads of things that are going on with us. And the truth is, we need once in a while, we need a hangout, we need a place to stay and discuss what is going on. And of course, the different things that we can do to better our situation. And this month's edition, well, it's a little bit different than other months because this month we're going to be talking about investment. And yes, I am going to be your host for this hangout today. I'm not a millennial though, but I'm a millennial's close friend. Anyway, I am Kemi Michael and I'll be your host today for this event. I've got beautiful panelists that are going to be discussing about investment, and of course they're going to be giving us an aside. They're going to talk about, apart from the panel that is, they're going to talk about investment opportunities that you can even look at and you can also invest in. And here's the thing with investment, you have to be sure about it. Apart from that, even when you're taking risks, you have to take calculated risks. And that's one thing I know about investment. And our speakers who are already into this would give you every single thing it is that you need to know about investment. So let's get straight into it. Today I've got beautiful speakers today, and one of them happens to be, well, her name is Praise. I will start with Praise. Her name is Praise Iwariobo. I'm hoping I'm pronouncing that correctly. Praise? Iwariobo. Thank you so much. I hoped I didn't murder it so much. Thank you. Now, one thing you should know about Praise is that she's an investment management professional with experience in treasury, portfolio management, wealth advisory, financial advisory, business development, investment product development, and investment operations. And here's the thing. With people like this, they know their onions. And she's going to be talking to us. She has 10 minutes right now to talk to us about all of these things. She's got a presentation and she's going to be giving that to us. Praise, are you ready for us?
Hi, thank you very much, Kelly. It's a pleasure being here and speaking to you all. Quite an interesting topic which we have here, investment opportunities for millennials. As millennials, we are young and, trying to figure things out, especially our finances and all, and it's, very interesting that we are having these conversations now. And I think for me, one thing that's very important when talking about investments, especially as it relates to individuals, is you have to first understand yourself. Yeah. You have to understand as an individual, what are my investment objectives? What am I trying to achieve? What are my liquidity needs? What are my risk tolerance? Because these are the things that will impact what you can invest in. Mm-hmm. Are you trying to invest for the long term, or are you trying to invest your house rent? I mean, if you're trying to invest your house rent, you can't gamble with it because you don't want to be sleeping on the bridge by the next year. All these factors impact the investment decisions that you're going to make. Liquidity needs, how much liquidity do you currently have? What are you trying to start investing with? It impacts what your options are, and even with your risk tolerance, how much risk are you willing to take? How much risk can you take? How much risk will land you in the hospital by the next morning once you discover that money is gone? So you have to take all of this into consideration when deciding on what investment opportunity to look at. And in looking at investment opportunities, there are a wide variety of asset classes that are available. You have the money market, you have the fixed income, you have equities, you have alternative asset classes. I mean, money markets that you're looking at your treasury bills, your commercial papers, your placement. Fixed income, you're looking at bonds, you're looking at euro bonds. Equities, you have the Nigerian Stock Exchange, or if you're looking to diversify diversify your portfolio outside the country. There are also US equities which you can also look at. Alternative asset classes, I mean, anything that doesn't fall under money market, doesn't fall under your fixed income and equities, it goes into your alternative asset classes. So your real estate, those that are into crypto, all of that, they all fall into the alternative asset classes. And I think it's important that it's good that I'm the ones talking first, because as a millennial, PiggyVest is your investment body. Like, if you are looking for an investment opportunity as a millennial and you don't have PiggyVest, I don't know what you're doing. So there are lots of investment opportunities for millennials on PiggyVest. We have various products. If you are looking to invest for the short term or the long term, if you are, we have like a piggy bank. Piggy bank, you can lock in funds for as little as 30 days to 1 year, 2 years. So like I said, it all goes back to what your investment objectives are. What are you trying to achieve? So if you need your funds back in 30 days, meaning that you should be locking in those funds for nothing more than 30 days. We also have our Flex wallet, which is important if your investment opportunity is to build your emergency savings. For some people, if say their car spoils right now, they don't have any funds to fix their car, they probably have to beg to fix the car. Or if they are in the hospital and they probably don't have an HMO, they probably have to beg family and friends to pay money for their hospital bills. It's important that you have an emergency fund, which is one thing millennials can use their PiggyVest Naira wallets to build. We also have target savings for people who have a target in mind. Maybe I want to go to do my MBA in the next 1 year. I'm trying to save towards that. I can start a target that would run for the next 1 year and pay me back when I'm ready to start processing my school applications. We also have Flex Dollar. For millennials who probably have dollar obligations that they need to pay on, that is a good opportunity for you to invest your dollars as well. We also have Diversified, where we list lots of opportunities, and typically when we identify opportunities that most likely offer higher returns than what's currently on the app for our users, we put them there. And if someone is looking to, they have some funds they would like to invest, Diversify is your body. Like I said, PiggyVest has you covered as a millennial, so don't sleep on PiggyVest. I would also say that in investing, it's important to build your cash so that you're able to take advantage of opportunities. If you don't have cash, I don't know how you want to invest. So the first thing is building your cash. Cash is king for you to be able to even start that investment opportunities. When people are coming for shows or talks like this where we talk about investment opportunities, they're probably expecting to find ways to make quick money, but I really recommend quick money investment options for you. It's important that you are consistent and disciplined in building your savings and your investments, and then over the years, when you look back, you'll be amazed by how much growth that you have made. And having knowledge of an investment opportunity is not the same as having the capital. So you might have the knowledge, but you don't have the capital that you require to take advantage of an investment opportunity. Like, okay, you want to invest in stock, but you don't have the capital for it. So it's very important that you make sure that you build your capital so that whenever opportunities come up, you are able to take advantage of those opportunities. I think I'll hold on for now because I know your other panelists probably have teachers and probably have questions for us.
All right. Thank you very, very much, Praise. And that was a beautiful one. Now, if you have any questions to our audience listening, if you have any questions, you can put that in our comment section, put that down, and we're going to get right into it. So if you have any questions, do well to put that down in our comment section, and we're going to take those questions right after it. Now, moving on to our very next panelist. His name is Olabode Adoniga. I'm hoping that is also a correct pronunciation. Olabode Adoniga. Now, Olabode is a seasoned investment professional with extensive experience in navigating both domestic and international financial markets. His expertise spans global equities, exchange-traded funds, that's ETFs, as well as fixed income securities and financial derivatives. Now, let's welcome him as he gives his presentation. Olabode, are you there?
All right, I'm there. Thank you very much for that. Briefly, let me share my screen so it will guide my train of thought. So, okay, I don't know if you can grant me permission to share my slides, please.
Yes, yes.
Okay. Okay, please confirm if you can see my screen.
Yes. Yes.
All right, so briefly I'll be walking us through basics of investment basically so that everyone is carried along, and a couple of asset classes that one can invest in as a millennial, and also some strategies and precautions to look out for basically, just those three. So to start with, investment is, you can define it as a commitment of your resources to achieve benefits later. You look at it that like we earlier heard from praise, you could save money maybe for short term, for long term. You could invest now to pay your rent or for your children's future, school fees and all that. But importantly, before you begin to invest, there are certain questions you want to ask yourself. And there are three basically. The first is your investment objective. What do you want to achieve? Are you saving for a rent? Do you want to make money? Do you want to preserve your money in education? For the elderly, the retirees, they probably want to have an investment that can give them current income while they are no longer earning salaries. Also, you want to look at the duration of your investment. If you are looking at short end of the year, 3 months, 6 months, or you just have liquidity for to invest for 1 month to earn some returns. You're looking at something long term. Maybe you are saving as a millennial at a retirement. You want to look at your time horizon. Also, you want to look at your risk appetite. Investments, they come with risks a lot of times, and if you are not wanting, if you don't want to make your money, like if you are saving ahead of your rent in the next few months, you probably don't want to invest in the high risk, something low risk, so that you don't lose your funds and you don't want to sleep on the streets. So yes, for different asset classes, as earlier mentioned, we have fixed income. In this case, you know your return. And we're giving you $1 million now to get 20% return in a year. I know after that year, I have made 20% return. So the risks are low. You do also need to be very savvy as an investor to participate in something like that. It's straightforward, and the returns are potentially low too. But at the moment, interest rates are high. So this is a time for both the savvy and not so savvy investors to take advantage of fixed income investment with low risk. You can see treasury bills printing around 28% yield now. So that's attractive. Other than that, we have shares, which we call equities. You can also call it stocks. But potential returns can be higher. The returns is also not fixed like the fixed income. You can potentially lose some funds, and it's good to have a long time horizon when you're investing in stocks because of the risk. Aside from stocks, we also have other asset classes, alternative assets. like commodities, they are also good. In Nigeria, you can see the prices of commodities going up. Look at the bag of rice. If you can buy a financial commodity, rice last year, now you see bag of rice around 80,000. Last year, probably around 50. 2 years ago, maybe around 30,000, those kind of appreciation. If you've purchased it, you tend to earn return. We have real estate as well. It's almost a safe haven in Nigeria. When you buy properties like land, they tend to appreciate over time. So that's another asset class. We also have private equities. Um, this kind of asset class can give you potentially higher returns as well. They are also good for diversification. And lastly, we know here of digital asset. They also classify as alternative asset class, but for convenience, I separated them. Your Bitcoin, your NFTs, other cryptocurrencies, they are quite volatile. You probably don't want your the large chunk of your investment to be in this class because they are relatively new as well, right? So they are volatile, the risks are high. You probably want a little portion of your um, total assets or investments in this asset class. Then to round up with my last slide, when investing, you want to have a clear objective, right? There are certain things you need to, have in mind before investing. The first one is know your objective. If I'm investing now for 3 months, my investment should follow suit. Maybe a fixed income investment for 3 months, place it with a bank or an asset manager. Know that 3 months you are earning maybe 10% that will be prorated for your 3 months. Fine. No need to speculate with stocks or say, yo, let me buy dollar. Maybe dollar will go up against naira. No. Invest in line with that objective. Then when you have your objective to develop a policy with it, know your risk appetite. If you are the type that cannot withstand losses, maybe you should stay away from cryptocurrency, stay away from equities, invest with fixed income so that every day you are checking your statements or every month you see that your valuation is going higher. Then when you invest, to follow your policies, any probably want to stay clear or invest very little, something you can afford to lose. The third one, knowledge, it ties closely with your investment policy. Invest in what you know. That way,
Bad. All right, so we would have to move on from that. Hopefully, you get
sorry.
okay.
I think my network just happened. Can you please assist me with where you lost me?
Okay, so you were talking about the before you got to fear of missing out. We're talking about the things we need to know before, exactly, before investing.
All right. Thank you very much. So you need to know what you are investing in. Don't just invest because people are investing in it, and that leads us to the next point, which is the fear of missing out. You don't invest because everybody is investing in it. You just don't look at it that, oh, there's a crypto everyone is doing, let me do it. There is, a Ponzi scheme everyone is doing. Don't just do it because of that. Look at your own policy. Does it tally? Look at your investment objective. Is it in line with it? If it's yes, then you go into it. If you feel like joining, then you probably go with what you can afford to lose. That way, it's a scam or it doesn't work out, you won't, be severely burnt. Then lastly, diversify. Do not put all your eggs in one basket. If all you have is in stocks and stocks are not doing well, you will be severely hit. So you want to spread your wings, just diversify a little in commodity, a little in real estate, a little in stocks, some in fixed income, such that you still achieve your investment objective. And that will be all from me. Thank you very much.
Thank you very much, Olabode. That was a very beautiful one. And of course, if you are on this call, if you're in this class, do well to ask your questions. You can send them in as a message, or as a comment rather. Send them in as a comment, and we are going to be visiting them very soon. Now to my next speaker, who is Abbas Akinsoya. Now, Abbas Akinsoya is currently the head of sales and business development at Zcrest Wealth, and that is a subsidiary of Zcrest Group. He's responsible for providing leadership, guidance, and mentorship to the sales firm or the sales team, while also providing comprehensive strategies to drive revenue, growth, and market expansion. Now, he is a certified project and wealth manager and has a very strong drive for providing strategic leadership and direction towards problem solving. Let's clap for him and welcome him. Abbas, are you there?
Yes, I am with you.
Hi, welcome.
Good morning. Please confirm if you can hear me.
Yes, loud and clear.
Thank you very much and good morning to my co-panelists and the audience as well. So thank you once again for the opportunity to be here. The theme of this session, if you like, is talking about Millennial Hangout, and it's also important to understand who a millennial is, right? And so permit me to start from there. The millennial generation Y, or if you like, you can say Gen Y, and it's a demographic cohort after the Gen X and just preceding the Gen Z. It's also important to say that for millennials, it's widely acclaimed that they are usually giving birth to between 1981 to 1996. So we're talking about a 15-year age range. And if you come down to today, that means that a millennial, you should be between 28 to 43 years. Why is this important? It's important because it has to do with your world cycle, your world journey. World journey in the sense that you go from wealth creation, wealth accumulation, preservation, and wealth transfer. So your age bracket determines what you should focus on. Your age bracket should determine your investment strategy. Your age bracket should determine your risk appetite to some extent. Your age bracket should also determine the kind of solution or product you want to invest your money in. This is so important because you have to be conscious about where you are. You have to be conscious about your income, your ability to generate income. You have to be conscious about your ability to transfer your wealth to your dependent, as it were. So the millennials generally, they create wealth, they accumulate wealth, and then they are supposed to preserve their wealth. And so my conversation is going to be around these three stages of world journey of a millennial. So basically, permit me to start by saying, again, like I said, stage of world cycle of a millennial: creation, accumulation, and preservation. So having established this, it's also important for you to know what strategy you should adopt as a millennial if you're going to be investing. Basically, just one line. Your investment strategy as a millennial should be dependent on market information. Market information has to, with regards to what exactly is going on in the environment, what products are available that you can maximize, what products can you invest in to earn maximum return, what products you can invest in to minimize your risk while also looking out for alpha at the same time. And also to say that your investment strategy should be centered around diversification. For a 28 to a 43-year-old, right? There's a probability that you have kids, and there's also probability that you're getting closer to retirement for a 43-year-old. So the ability to generate wealth at 43 can be compared to the same ability to generate wealth when you're just starting your career. So ordinarily, you should be looking at ways of creating wealth, talking about the younger Gen Y now, as it were. And so at Zcrest, we have solutions that cut across all these various world journey from creation, accumulation, and then preservation. So for a millennial that is just starting his or her career or early days of the career, so I would recommend you start from looking at savings product and investment product. I mentioned that your investment strategy should be driven solely on market information. Just to digress a bit, over the weekend I was with some friends and someone said he's earning 15% on his return. And then someone said, okay, we're earning 15% return in this economy when the least that you should be earning on your investment should be 18-19%. I mean, what struck me was that I was asking the person, how come you know about this? And he said he gets VetCrest research reports. What our research report will do for you as an investor, as a millennial, is going to point you to the right direction to invest. Imagine NPR rates moving to a via 26.75, and then your return on your investment is about 15%. What I'll show that there's a gap with regards to information that you have on your investment. So if you're going to be investing your funds today, you should be looking at upward closing to 20% rather than looking at 15%. And why am I emphasizing this so much? I'm emphasizing it because at the stage of this life cycle where you are with regards to accumulation and creation of wealth, you must focus on investing in products or in solutions that will help you to grow your wealth as well, because this is the most important phase of your career. This is the most important phase of your life. So whatever you do, whatever investment you put your money in has to work for you as an individual. So please permit me to also break down your investment solutions along different classes, like I actually mentioned, information and diversification. And you should cut across different asset classes, from short-term instruments to long-term instruments. So what do you do now that you're in an high-yield environment? Yes, you should be able to invest more of your funds in short-term instruments, or if you like, money market instrument, where that has tenure below 1 year. And when I mean money market instrument, I'm speaking about deposit placement, the money market fund, the commercial papers or treasury bills. Like one of the panelists mentioned, in today's market, your yield can be as high as 30% in the money market instrument. Why? Because the NPR rate is currently at 26.75. And what I'm trying to also point to you is that your return on your investment should also be driven by what is currently happening in the market. Again, information and diversification. What are the examples of investment you can of investment products you can look at? You can look at stocks. Year to date, the Nigerian capital market has returned over 30%. That's like 400 basis points less than what inflation rate is currently in. You want to put a portion of your investment in stocks. You also have to look at the opportunity that the stock market provides for you. Banks are currently raising capital, and so what that means is that a lot of capital, they have a lot of investment that you can do in that sector. There are a lot of opportunities that are open to banks, and in the meantime, what you can see that you begin to see an increase in the share price of these banks, right? Year to date, the industrial sector has returned close to 70%. So you need to understand what information is available for you in this market, and 70% is almost double what the inflation rate is today. Again, I mentioned, you must know what's going on in the market. You must be able to, you should have first-hand information of solutions where you can put your money in. Now, with our research report, you can sign up to our research report at ZCrest to be able to have information on what's going on in the market. So I mentioned stocks and the bond market. Even though the bond market is not the appropriate place to put your funds now because of the high yield environment. So if in the bond market, you want to begin to look at money market instruments where you can get upward like 10%, again, depending on the instrument you are investing in. So having said that, so again, for wealth creation, we have service products in-house. We have a couple of savings products that you can put your funds in. I mentioned the money market fund, which is currently up for 20% as of today at ZCrest Wealth. Again, we have the dollar fund. So I spoke about creation, the accumulation bit, and preservation. But before I go to preservation, wealth preservation, let me say something at this junction. I hope we also know that investing in ourselves is also a kind of investment. So you understand your wealth journey, you know what you want to achieve. You know that where you are currently with regards to your earnings will not take you to where you want to go. So let me also say at this point that I will suggest that you take up a course or you do that master's degree to be able to help you to increase your income so that you can be able to achieve your world journey. Every millennial should have a world journey, a plan to a world journey. Every millennial should have an objective. Every millennial should have a goal and what they want to achieve in the nearest future, as it were. So I hope you know that you can also take courses that will enhance your skill, get information, upscale your knowledge relevant to your industry or your ambition, as it were, so that you can be able to accumulate more income to invest in instruments or solutions that will help you to grow your wealth. And also wealth preservation, you also have to start considering investing in dollar instruments that will help you to preserve your capital, that will help you to guard against inflation and devaluation of the currency. So at ZPS Wealth, we have our dollar fund. Yes, you can fact check me. Today, our dollar fund is one of the highest performing instruments in the market. Year to date, I emphasize that again, year to date, currently above 7%. Last year, the ZPS dollar fund returned upward 10%, 10.62, and we are also on that same journey this year to return, if we continue at this current trend where we're going, 12%. But year to date, our dollar fund is currently trending above 7%. So you can look at creation, like I mentioned, look at accumulation, look for avenues where you can grow your wealth, your income, and also preserve your wealth. Having said all this, it's important for millennials to begin to think about how you can ring-fence your investment, your wealth accumulation through simple ways or through insurance products. In this economy, we all know what's going on in this economy as of today. So you can't afford to bring out money from your savings to replace an asset. You can't afford to also lose an asset at this point in time. So beyond creating your wealth, beyond accumulating your wealth, and beyond preserving it, make sure you ring-fence your wealth so that in case there is a replacement cost, you can transfer that risk to someone else. Thank you. I can hear you.
We can't hear you.
Is this better now? Can you hear me?
Yes, we can hear you.
All right. Sorry about that. Thank you very much, Abbas, for that beautiful one. I learned a lot from there. Now we'll be moving on to our next speaker. Her name is Ifeoluwa Adegoke, and I'm happy that I pronounced that better. All right. She's a leading voice in the financial industry, helping individuals to transform their financial stories and design their fulfilling financial life. Let's welcome Ifeoluwa Adegoke as she gives us a presentation. Ife, are you with us?
Yes, I am. Thank you for the warm reception. It's great to be here. And I must commend the other speakers. They did a great job in really teaching. We practically just witnessed the whole masterclass on investment basics. So a great job to all the speakers ahead of me. So I will just touch on some extra points that I believe are important for millennials to know and tips to have as they begin or continue on their investment journey. So the first thing I would like to talk about is this investment principle that is very, very important for any millennial, anyone basically that wants to succeed on the investment journey to really pay attention to. It's a fundamental principle that guides wealth managers across the world, the best of the best. And it's quite a simple principle. And once you understand it and you try as much as possible to always apply it, you are halfway through your successful investment journey. All right. So the principle is the higher the risk, or the higher the potential reward, the higher the risk. So when you are starting out as an investor or you are an investor, you have to understand the relationship between risk and reward. So every time you see an investment opportunity, most times, most often than not, what our focus is on is what am I getting out of this investment? You never really ask yourself, what am I risking? Because with every investment, there is risk associated with it. So even with low risk investment, because personally, I don't believe in a risk-free investment. The only type of investment that we can classify as low risk is when somebody else is bearing the risk on your behalf, say an asset manager or financial institutions that we've had their reps, some of the speakers, they've touched on their products today. So somebody else is bearing the risk on your behalf and doing the work for you. So as an investor, you have to really understand that there is no easy guarantee. I can't count the number of times I've read emails or DMs that people will say, oh, this investment is looking good, but I want 1,000% certainty that there is no risk attached. So I always say there is always risk attached. So when you are even going for any investment product, you have to understand, okay, who is bearing the risk, and can I trust this person with their skills, with their expertise, and their track record to deliver on the promise of return and even giving me back my capital. So risk and return is very important that we understand the relationship. They are siblings, they go hand in hand. If you want to make money through investment, you also have to understand risk. And we have some of the speakers that have touched on some of the risk categories that we have. We have the low risk investment opportunities. We have the medium risk. I believe Olabode did quite justice on that, touching on that. And we have the high risk. So when you see an investment opportunity, again, the first question you should be asking yourself as a seasoned investor is not, how many percent? Because that's what most people ask, and the conversation ends there. You should be asking, what are the risks associated with this? All right. Another thing I want to point on, tip I want to give you, if you really want to succeed in your investment journey, is to always ensure that your finances are in order before you start your investment journey. It's quite common nowadays that people are trying to use investment as a poverty, for lack of better word, like a poverty elevation scheme. And that is why a lot of people fall into the wrong hands. That is why you fall into Ponzi schemes, because you're looking for quick money. And a lot of people approach investing as a get-rich quick scheme, I beg your pardon, which is not. Investing is a lifestyle. If you really want to succeed at it, you have to be willing to make it a part of yourself. I've been investing now for over a decade. My first investment was with 5,000 Naira, and now I've built my capacity to where I can invest millions. It's part of who I am, it's part of what I do, because I see investment as an enormous financial tool that will help me build the type of financial life I want for myself in the future. So 5 years ago, I dreamt of being 10 years ago, I beg your pardon, I dreamt of being where I am today, and investment has contributed significantly to that. So you have to see investments as a long-term thing. Of course, there can be short-term approaches you can incorporate into your investment strategy, but never treat investing as a get-rich-quick scheme. All right, where I can quickly make quick buck. They said this one is 40% per annum. Or 40% every 3 months. Let me quickly do it with my rent money, or let me quickly do it with this ajo money that I collected. I've usually had many people actually come to me and say, "Oh, I saw this investment opportunity. Can I quickly do it with my rent?" And I'm like, so what happens if that investment goes? Is it south now?
Yes.
If it goes wrong, what happens? So what are you going to do? Are you going to live under the bridge? And trust me, this is an investment mistake I also made myself when I started over a decade ago. I invested my rent, and I learned the hard way, a very tough way. So you always have to be sure about what your objectives are, like some of the speakers have mentioned today. And before I'm moving now to the third point. Before you choose any investment, add any investment to your portfolio, always ask yourself, does it align with your investment objectives? I always say on my platform that it's not every investment that is best for you, right? What I would advise a single mom that has 2 boys that she's sponsoring through school is not what would work for a tech bro that is earning in dollars with no financial responsibilities. There are different life situations, there are different scenarios. So you have to understand where you are and where you're looking to get to, and look for investment opportunities that would help you get there. So all the things that you see on social media, don't just go and be buying it. I recently shared a story of one of my clients that I worked with. This man had been investing for years. This is even someone that there's capital, there's no lack of capital to invest in. But every investment opportunity he came across, he would just put money into it. And over the years, he could not really track all these various investments that he has scattered his money across, because they just sounded nice and then he just disbursed capital towards it. So you always have to be clear about your investment objective. You always have to be clear about where you're going. Always be clear about the risk. All right. I also want to say, this is the fourth point now. Have a good structure going on in your life before you go into investment. So I wonder why people would not have savings that can come in handy during difficult times or times that are also emergencies, and say all their savings, all their life savings they want to put in towards investing. That is completely wrong. You have to have your savings in place. You have to have your emergency fund in place before you can actively say you want to start investing. Now, you can look at, thank God for some of the speakers we've heard today. There are, however, high yield savings accounts that you can even still have that will give you some interest on your savings. So this is putting the cart before the horse, is used just investing all your life savings without having any backup plan. And I've seen this play out over and over again, where people say, okay, I want to invest all this money that I have, and then life happens and you have to liquidate that investment before time, and you lose money to fees, you lose money to exchange rate, you lose money to selling out of that investment way before the time. Some even come with penalties. So you have to put structure in your finances such that if emergencies come, you have something that can take care of that. And your investment is just another leg of your financial life. So it is important to not put the cart before the horse. Ensure you have a good and solid financial structure for yourself. And of course, some of our speakers have spoken about fear of missing out. So I recently spoke with somebody that was like, okay, everybody is investing into stocks. Does that mean that's where I need to be? To me, that's a fear of missing out mindset. Because everybody is investing into stock doesn't mean it's where you should be. You have to ask yourself, does it align with what I want for my life? Does it align with the kind of investment? Does it align with my risk? Does it align with my time horizon? So those are some of the top questions we need to ask ourselves. And personal finance is very personal. That's why the word personal is there. So you always have to, even when you see things on social media or you're part of conversations like this, whatever you learn, take it back and apply it to your own life, apply it to your situation, apply it to your goals, to your dreams, and where you want to be. Because we are all unique in our own way. And funnily, when people say, I want to build wealth, I ask, okay, what does that mean for you? Because for somebody, it can mean a fancy house in Banana Island, whereas for another person, it's a cottage house in a rural area with all the things that they love and all the people that they love. So you have to be clear on what your dream financial life is, and what your fulfilling financial life looks like, and then pick the tools that will help you on your journey there. Thank you very much for having me.
Thank you so much, Ifeoluwa Adegoke. That was a very beautiful one. Now we're going to move straight into the panel discussion right now. And I would like to again welcome my panelists. That is Praise, Olabode, Abbas, and Ifeoluwa. And for this panel session, yes, we're going to be delving deep into investment opportunities for millennials. And here's the thing, as a millennial by now, you should have at least a saving somewhere, mostly because the economy that we live in right now, if you do not have something to save you, you might look for something else that would be needing you to be saved. All right, but let's get straight into it. Now, I'd like to start with Abbas. Yes, mostly because I'm starting with you because you mentioned something about wealth creation during your presentation. Are you with me?
I am with you.
Okay, you mentioned something about wealth creation during your presentation, and I would like us to start with that. All right, because for you to invest, you need to have created something or a structure where you have money flowing in. Now, how exactly can millennials go about this? Because right now, a lot of millennials have just 9 to 5 that they're doing. And I'm quite sure your 9 to 5, not everybody's 9 to 5, let's say in the percentage of 100, about maybe 40, 60% would be able to only use their 9 to 5 salary or income to eat, shelter, and the basics, but would not be able to invest it. How exactly can millennials in this time and age, especially in our climate, how can they create wealth?
Thank you. Thank you very much. I like to start by saying that you can't. Can you hear me? Please
Loud and
confirm you
clear.
can hear me loud and clear.
Carry on, we can hear you.
Oh, okay, great. I would like to say that you can't give what you don't have, right?
Mm-hmm.
And before you get to your destination, I mean, you must start from somewhere. So I like to answer this way by saying, start from where you are. What do I mean? You know what your current capacity is with regards to what you earn. You know your responsibilities. You also have what we call the black tax. Or you also have to do a due diligence with regards to what you can do as where you are. In today's economy, I know a couple of savings ability has been depleted because of the high cost of living, reflecting in the inflation figures. So I would suggest to you that for you to begin your world journey, you start from where you are, starting from where you are with regards to how much you earn. Like some of the panelists said, there are savings products and solutions that you can key in that can take you to where you want to go to. And like the last speaker also said, you have to personalize it. You don't necessarily have to do things that are not necessarily within your own immediate goals and objectives because your friend or your neighbor is doing it. You have to understand the product you want to invest in and then what you intend to achieve out of that. So there are a lot of reasons why people save. People save to parents, people save to study abroad, people save to provide for speculative purposes, if you understand what I mean. So you have to look at products where you can invest in that will help you to achieve your objective. So starting from where you are is very important.
Abbas, are you still there?
Horizon and also in hello.
Yes, I can hear you now. It's froze for a minute, but carry on.
Oh, okay. So I said starting from where you are is very important and what you intend to achieve, your investment goals and objectives, right? And also investing in the right product. You can be investing today and then shortchanging yourself by as much as 400 to 500 basis points in terms of return. So you need market information to invest in the right vehicle. You need market information to invest in the right product that will be able to help you get closer to your objective, or if possible, even help you achieve your objective. Also try to understand your capacity to even make money, to make more money, and also give you that disposable income that you can save from. So in a nutshell, just to summarize everything I've said, start from where you are, understand your investment horizon and the goals and objectives you want to achieve, and also getting the right information in today's market, in today's high yield environment to invest in the right products and devise solutions that will help you achieve your objective. Thank you.
All right, thank you so much. Now, I'll be moving on to Olabode, and you did mention fear of missing out. And I would like to know, in the era of MMM, there were loads of millennials that invested their money in that. And let me tell you this, because of the way it was, because of the way we could see loads of people earning from that, people decided finally to put in their money in that, and then those were the people that were rug pulled, more like, if I can use that word. They were rug pulled from the whole scheme and all of that. Now, how exactly can we break it down and remove that fear of missing out before we actually invest?
Okay, thank you very much for that question. It's simple, right? One of the things on my slide during the presentation is when making investment, you want to be rational. You do not want to be emotional with your investments. You want to have a clear investment policy. If you see the MMM structure, oh, there is MMM, everyone is making it. The first question you should ask is, I mentioned know your investments. Okay, everyone is doing, what's this MMM about? Is it a company? Is it a fund? Am I buying shares? Is it a fixed income investment? How does it work? Yes, MMM works more like a fixed income investment. You are earning, I think at that time, 30% every month. When the returns are too juicy and the risk appear not to be there, if it's too good to be true, maybe it's not true, likely not true, you probably want to get your guards up. 30% every month in 12 months, you are looking at more than 300%. That's like 360%. That's 3.6 times whatever you are putting in. It's a lot, right? So those are the indicators. When you now investigate, it's simple. I pay into the system, you receive it. You pay into the system, I receive. So as long as they are paying, it's just my money that is paying you. There is no productivity, nothing. That is a Ponzi. My money used to pay you. So in such a case, you are not investing. It's a very high risk. Of course, you may decide that you don't want to miss out, but you already know the risk. So I have maybe 100,000 and I want to participate, something like that. You know that you don't want to go beyond maybe 100 naira. I'm just putting things into perspective. So let's say I lose my 100 naira. Well, it's not too much. I can, bear that burden. So that's how to navigate. Of course, we are young, late 20s to our mid 40s, right? Those are the millennials, right? So you want to participate in some of these things, maybe crypto, maybe multi-level marketing, high yield investment, but you want to know your risk, know your own risk appetite, and you invest with what you can afford to lose. In that case, it's gamble, it's not an investment, so you don't want the bulk of your cash going into it. But for those that don't know what MMM is and they just went in blindly, the key thing is don't invest blindly, don't just follow the crowd. Do your due diligence, basically. So those are the two things. Once you do your due diligence, it's probably not in line with your own investment policy, you stay away. But if you have a high risk appetite to even go into gambling or high yield investments or Ponzi's, then you go in with what you can afford to lose, so that when you get bonds, you don't get overly bonds. I hope this answers the question. Thank you.
All right, thank you very much for that one. And I'll move on to praise. During your presentation, you spoke about objectives for investment, right? And several times we keep saying, oh, you must have an objective for investing. But the truth is, at the end of the day, there is just one objective, and that is to actually make money or to have more money. That's the whole idea of investing. Would you help us break down the other objectives of investing? Because I understand that sometimes it could be personalized, but what exactly are they, and how can we figure it out for ourselves?
Okay, thank you very much, Kenneth. That's a very interesting question. Like Ife mentioned, two people might say they want to create wealth, and what wealth is to one person is different from what wealth is to the other person. So you have to define what wealth means to you. So in looking at investment objective, there are various investment objectives. Am I going into this investment to preserve my capital? Am I going into this investment because I want periodic return? I want maybe to receive interest or coupon payments or dividends, periodically, maybe on a yearly basis, on a quarterly basis. I just want some level of passive income. Is that why I'm trying to invest these funds? Or am I trying to invest this? Do I want to be aggressive with these funds? It's not about, I don't care about capital preservation. I don't care about, getting liquidity. I just want these funds to grow. And if you are, aggressive about your funds growing, it means that you also have to understand that the risk involved in trying to get that capital to grow is also quite high. So if you're aggressive about your capital growing, there's also a possibility that that capital might not come back to you the same way. So you have to be able to define what this specifically means for you. And Abbas also mentioned something about, starting from where you are and, creating a roadmap for yourself. So, if you're able to define, okay, this is what I'm currently earning, these are the things I want to do for myself, these are the things I want my investment to be able to do for myself. You have to set, realistic goals for yourself. How much are you expecting your income to grow and, be able to invest more over the next few years, try to create that roadmap for yourself and define what you want your investment to be able to do for you, realistic investment objectives that you want your funds to be able to do for you over the next, few months, if it's a short-term investment you're looking at, or, long-term objectives.
All right, thank you so much for that one, Praise. And for Ife, there's something you mentioned that really caught my attention, and that is systems or structures, building systems and structures when it comes to investing. Now, can you give us a little backstory that we can relate with when it comes to building a structure or a system in investment? Because most of us have tried starting, but because of our inconsistency, we're not very sure of how to go about it or how to continue. What exactly are the systems and structures that we can put in place to enable us?
All right, thank you for that. So first I would say there should be, in terms of structure now, and I'm going to speak like the financial planner. So there should be the defensive parts of your finances, and there should be sort of like the offensive. So the defensive part is where you have things like savings, emergency fund in place. And a lot of people, when they say emergency fund, it's like, how can I contribute 6 months living expense of my life? It can be an ongoing project you're working towards, where say you have 20,000 naira to save every month, or 20,000 naira disposable income as an example. You can divide it into buckets. So you can put some into your defensive strategy, which is your saving, your emergency fund. You can put some into that. Maybe you put 50% into that as an example, and then you can now decide that the other 50% can go towards your investment. So this is a very basic structure you can put it in place. Another structure that is quite simple for people that might just be starting is the 50-30% rule, 50-30-20% rule, which a lot of financial experts actually talk about. So it takes 50% of your income, monthly income, can go towards your needs. Needs are things that you need for your survival, like food, transportation, housing,
shelter,
things like that. And your wants are discretionary spendings, things that you spend on just because they feel good. And the rule says 30% of your income can go towards that, and 20% should go towards your savings and investment. So for somebody earning 100K, that should be 20,000 naira towards savings and investment. Of course, this rule, you can adjust it to fit your lifestyle. Some people are able to cut off wants and maybe just do 10% of their income towards wants, and do much more towards their savings and investment, maybe because they have a target they are working towards. So this structure can also help you sort of organize your finances in a way that is not overwhelming. And the idea is you're not just putting all your money towards disposable income towards investment without having savings, without having things like health insurance to cover you in case of health crisis. So the defensive part of your financial life should not be missing at the expense of the offensive. I know the offensive is juicy because that's where we really want to make money. You see investment that is 30%, like, oh, let me just gather all my savings and put it into that. I know it can be very attractive to us, but the defensive part is also very, very important. So when you are distributing your disposable income, you can structure it between these two categories. A portion towards your defensive, which is your savings or emergency fund, and a portion towards your offensive, which is your investments and the likes. I hope this helps.
All right, thank you very much, Ifeoluwa. That was very beautiful. And yes, it did help. At least now we understand how we can break down our income and share it into different aspects, making sure to add investment in it, which is a good one. Because I understand that in Lagos that we live in, a lot of things can come up and eat into your money, especially the ones that you have saved. So that is a very good one. Breaking down your income is great, and also having a part that you can invest with, you can part with so as to invest. Thank you very much. Now I'll be moving on to Olabode, and I would like to know how exactly can millennials in this time and age specifically, let's put it that way. I mean, first of all, with our dollar, our naira not very balanced at the moment, and not just that, but food, everything is on the increase right now. A lot of things are over the roof. Inflation is what we're seeing. It's the order of the day, more like. How exactly can we balance, as millennials, balance our risk and reward when it comes to investing in stocks, ETFs, real estate? How exactly can we balance that?
Okay, thank you very much for the question. So basically, investment is all about risk and reward. That's the truth, right? But when you look at inflation, like you earlier mentioned, inflation is about 34%, quite very high at the moment. But Nigeria's inflation has always been quite high, to be fair, and prices continue to trend higher, commodities and everything, even the US dollars. And that is one of the reasons when we say investment objective, if your money can always, what you can buy with your 1 million last year, if you can buy it with your 1 million this year, in the next 10 years, maybe 10 years ago, the value is the same. You probably don't have much pressure to invest. But in this our climb where, your 1 million last year, maybe you could purchase a car, and this year, the kind of car to purchase is, it has reduced, and next year you probably can't even purchase any kind of car unless maybe scraps, right? That forces you to at least invest. That kind of investment objective would be capital preservation. You are trying to preserve the value of your wealth, right? So yes, in this climb, also you need to diversify. Like I earlier mentioned, the US dollar continues to soar compared to the naira. Last year it moved from around 700 to more than around 1.2 or thereabout. This year now we are around 1.516. We've seen a peak of around 2,000 naira or close to. So 2 years ago, similar trend. 5 years ago, maybe some 400, 300 naira levels. 10 years ago, maybe 100 naira or below 100. So you can see that it's a trend that persists. It's not new. It didn't just start last year. It may be, shocking last year. That tells you probably want to, diversify. As you are investing in naira, buying landed properties here, real estate, stocks, fixed income investment, you probably want a portion of your investment in, hard currencies, maybe US dollars, to hedge against currency risk on one hand. So that sorts the currency pressure part. Then you look at commodities too. Like I mentioned earlier, if you look at prices of maybe tomato a basket, look at rice, they tend to go up, year after year, and I don't see that trend stopping, ending anytime soon. So you want to have a portion there as well. But then you can't know all. So you look at the commodities, or the kind of investment, maybe you are very versatile with real estate, you make it a larger chunk of your investment, diversify some into dollar, there are dollar funds, you can buy foreign equities as well to, enjoy such returns. Then that's about, investing and preserving your wealth, or even growing your wealth. Then the last, when you spoke about risk and reward, yes, you know yourself. What risk can you take? For some, they can wake up in the morning, check their portfolios. It is maybe 10 million. So when you are checking your same portfolio that was 10 million yesterday is now 8 million. Next week, when you check the portfolio, is 15 million. Some can live with it. But there are some, you checked yesterday is 10 million naira. Today you are seeing it will, you begin to shake. Next 1 hour you check it. After 1 hour you check it. If you are like that, you already know, even when a stock or certain investment will give you a lot, you probably want it to be a little portion of your total investment, so that your heart, you won't have unnecessary blood pressure. That's how you measure it. Also, for risk and reward, like we know, equity is higher risk and people go there for a higher expected return compared to fixed income, which is lower risk. But at the moment now, I earlier mentioned we can see treasury bills with yield around 28%. Those are short-term fixed income instruments. We have bonds, which are long-term, also giving yields returned above 20%. So those returns are high. When you look at equities too, a lot of companies will probably give you similar return. So to balance your risk and reward, you may want to do more fixed income, since you enjoy a high return and the risk is low. Do it, make it the bulk of your investment, so that you enjoy a high return at very little risk, compared to stocks that they begin to move up today, down tomorrow. It's a way to balance. Look at the reward. Is it worth the risk? If you can get 28%, 25%, almost for as little as it's, for very little risk, almost risk free, why should you, because of 30%, start risking to lose your capital? That's how to think about it. Sorry for taking too much of your time. I hope I answered that question.
Thank you. You did answer that question very well. And I'll be moving on to praise. Now, as millennials, we have seen technology grow. We've seen technology grow from when we did not have internet, to when we had internet, to when we're able to start using phones that we could type on and press really hard, to now where we're using touch screens. And we are able to accept these things. What exactly can we use, or how exactly can we use this technology to our advantage when it comes to investing? Because it's something we have seen growing up. I mean, for the baby boomers, they might not be easily open to accepting it, but we as millennials, it's quite easy for us to accept that, because we have seen it, we have grown with it, and we know the opportunities, or at least we have an idea that there are opportunities. So how exactly can we use technology to our advantage when it comes to investing?
Okay, thank you very much. That's a very good question. I think one thing I'm going to start with, because I mean technology has like various aspects. One thing I'm going to start with is social media and the internet. I mean, what that does for you as an investor is it makes it easy to follow up with the news, know what's going on, and see how people are reacting to this news, and what the potential impact is on your investment, getting people's opinions on how this will impact investments, and just even being able to communicate with people for you to get a sense of what the expectations are on how the news will impact investments and all. So I mean, one thing is social media, another thing is communication. It has really helped to improve communication even between market participants as well. The other aspects of technology I'll look at is also savings platform. Like I mentioned, PiggyVest. I mean, it's very interesting that you can sit down on your phone and you can invest your funds. You don't even need to shout too much or talk too much. You have your investment opportunities on your phone. It's very interesting for us. And the other thing is, technology has made it possible for you to be able to look at your portfolio statements. I mean, if you are trying to say, okay, what is my net worth as at today? You can generate your statement on Piggyvest, the money market fund. Abbas has talked about his money market fund. Most of these money market funds, they have technology softwares that help them to be able to generate statements for users. You're able to see, okay, what is my net worth as at today? What is the value of my investments as at today? That has really helped with being able to manage your investments.
All right, thank you very much, and thank you for keeping that short and simple. I appreciate that. All right, so moving on, I'd like to ask Ife this particular question. Now, what exactly are the common mistakes that millennials should avoid when it comes to investing? Because truth be told, apart from the MMM scam, there are several other scams, let me put it that way, several other of these opportunities that show or rear their heads. And we millennials, because we're so open to new technology and new things, we decide, why not? So what exactly are these common mistakes that we should avoid?
Common mistakes to avoid. Okay, so the first one is it's still part of what we've been talking about, is not knowing yourself and jumping into every investment opportunity that you see, right? So the most common mistake you see out there is people investing in fraudulent investment opportunities just because it sounds good. Now, if you notice, a lot of these fraudulent companies or fraudulent entities, they rely heavily on word of mouth. So you will see that they have testimonials. They have people that will tell you, oh, they've been paying for 3 months, they've been paying for 6 months. And, they have your friends that are already using them, cashing out, and they want to help you. So they will come to you and say, oh, this investment opportunity has actually been helping me, has been paying. And you also jump into it without doing any research. So you have to be able to see through the kind of structure that this type of organizations use. You typically not see them advertising so much, like say corporate entities like Zcrest and the likes, right? So you have to be able to decipher and also do your research. Always do your research with every investment opportunity. Like I said during my presentation, you have to be able to ask the tough questions, right? Okay, so how long have you been doing this? What is your company about? Is there any structure in place to ensure investment capital recovery should anything happen to my money? Ask the questions, because a lot of people feel like, oh, you don't understand that once the money is out of your hands, is for that period of time is no longer your money. It's with the investments that you've invested into. It's no longer your money because you don't have access to it. You can't make decision about that money any longer until the term agreed expires, and then they come with you. They come to you either with your returns and your capital. So you have to, at the beginning, before you release your funds, you have to ensure that you've done all the possible due diligence that you can do. So doing due diligence will really help you on your investment journey. All right. And just to add to that, I would say it is not very it is smart, I will use now, but it is very, very important for you as an investor that you prioritize financial literacy. I commend you right now that you're part of a conversation like this. These are the kind of places you need to be to listen to the industry trends, listen to the experts speak. This is a free conversation. And there are a lot of things like this happening out there where you can really listen to experts speak about investments and what is going on in the market trends and the likes. You should prioritize being part of that conversation. You cannot want to be a successful investor, beg your pardon, and not and just be there and not prioritize knowledge. Knowledge and wealth, they go hand in hand. So you have to prioritize knowledge as well. Because when there is knowledge, there is little room to fall into the hands of the wrong guys, because you know what you're doing now. So thank you.
Thank you very much. All right, we have a question, and this one is from Toluwani Adegunwa. And Toluwani is asking, can shares be used as a saving option for the short term? Let me start. Let Abbas go, because I'll be asking you a question right after this.
Thank you. Thank you very much. No, the simple answer is no. Shares cannot be used as a short-term instrument. Shares generally, it's a long-term instrument, except you see an opportunity and then you want to quickly take advantage of it by buying and coming out of it. But mostly, when you acquire shares, it's because you want to, you're keeping it for the future, and you have the mindset, or you believe that there's going to be capital appreciation. And you also know that the stock you're buying, they guarantee that at least once in 2 years, so what's the best case scenario every year, you're going to be getting some form of dividend. So if you're going to be buying shares, except for speculative reasons, please make sure that you're buying the shares of a company for you to hold for the future. It's a long-term instrument. Thank you.
All right, thank you. Now, so the question I was going to ask you before our audience asked the question, what exactly are those promising investment opportunities available for millennials in this time and age? I mean, first off, we've seen loads of banks advertising the sales of their shares, and we understand that it's because of the recapitalization. But what exactly are these promising? And also, from our conversation, we've also learned that it's not about the rewards, but it's about you knowing your risk taste before you go into it. I would like to know, in your opinion, what are these promising investment opportunities that millennials can actually buy into this time and age?
Thank you. So I'm going to answer that question in two ways. I'm going to answer it on the surface, and I'm going to answer it based on what's currently happening in the current economic climate. And that's simply because we're in an high-yield environment. And what that means is that when you're in a high-yield environment, especially for the short-term instrument, it therefore means that you also need to take advantage of it. And that takes me to the point where you have to be flexible in your investment decision, because when you see an opportunity to make more money on your investment, then you have to take advantage of it. So in this current economic climate, I would advise millennials to take advantage of short-term instruments, be the money markets, the mutual funds, if you like, or the treasury bill. We've spoken a lot about that, talking about how the yield on treasury bills is almost upward 30%, right? You can take advantage of that, or deposit placement as well. You can also get as high as between 25 to 30%, again, depending on the where you're investing your funds, and then the money market as well, which help you to balance this risk among all the various classes of money market instruments. It's also a good avenue. And yes, start talking about the current economic climate. But speaking generally, yes, my answer is going to be try to diversify your investment along shares and stocks, if you like, along the money market and bonds, as it were. By doing this, you're able to take advantage of you're able to take advantage of the interest or the return that each of those products gives you, and also most importantly, also looking towards the future by also taking advantage of the return that you're getting with regards to stocks, as long as you're getting dividends every year, and also the capital appreciation that it gives you, and not also forgetting the capital preservation or the wealth preservation outlets, such as the dollar fund or the flexible dollar savings platform, where you can preserve your currencies and also earn some form of return on your dollar investment. I hope that answers the question.
All right, thank you very much. Now, before we wrap up, I would like to give opportunity to my panelists to say, well, one or two things in wrapping up, they should give their last, more like statement, but not their last statement. Anyway, I would like to start with praise. And while you're at it, that's 2 minutes each for my panelists. But while you're at it, do well to mention at least one thing you are investing in, because we would like to know, so that we as well might check, do our research, and make sure it's something good enough for us. Praise, I'll start with you.
Okay, thank you very much, Kenneth. In closing, I would say cash is king. Ensure you build your savings before you even start looking at investing, and create that roadmap and understand your investment objectives, so that when you see investment opportunities that are coming up, one, you have the cash to take advantage of it, and two, you are sure it aligns with your investment objective. I would also say try to stay informed. PiggyVest does a lot of job in educating people on personal finance, especially on our social media handles. So just follow us and try to stay abreast of how you can be better with your personal finances. I would say one thing I'm investing in, obviously, PiggyVest. I love PiggyVest. I work with PiggyVest, so definitely I'm investing in some of the products on PiggyVest. I love the Investify function, Investify feature we have on the app, where different listings are put out. There are corporate debt notes, sovereign debt notes, and usually there are push notifications whenever these opportunities are available. So when you have the cash, you can take advantage of these opportunities. Yes, thank you so much. It was a pleasure doing this.
Thank you. Please stay on the call. Don't go anywhere yet. All right, we'll be moving on to our very next Olabode Aduniga.
All right, thank you very much. By the way, it is Oduniga. It is O, not an E. Oduniga.
Oduniga.
Right.
Is that better?
So yes, to kick off, I think I would like to appreciate Business Day for this insightful webinar. I've learned a lot from my co-panelists. I've learned a lot from the question of the moderator as well. All in, investment is interesting, especially when you are a Nigerian, because it's almost like it's a must. Your value, inflation is high, is always high. We continue to see for currency pressures as well. Then, when we mention investment, it needs not be complicated, right? They are fixed income. It shouldn't even be. For me, I don't do anything too complicated. Then, thirdly, I would like to say, for more, for more complicated investments or more savvy investments, you need not always do your investment yourself. You could work with an investment advisor. You could give your fund to a fund manager. They will scan you for your risk appetite. They will understand your investment objective and even your time horizon, so they can help you tailor it as it would best fit you, your profile, right? And that is one of the things we do at Redwood Asset Management. We are licensed by the Securities and Exchange Commission, SEC. And yes, as far as investment is concerned, I am an investment professional. My risk appetite is on the high side. I do a lot of equities personally. Of course, I still advise the average person to be careful, and the reason why I take high risk is I'm always in the market. The market goes down today, now I quickly take advantage. Today, if it adjusts back, I can close it and make my profit today, or later in the week, or next week, or next month. I'm always in the market. But the average person, I wouldn't advise speculating too much, because you are probably at work doing your work. You don't have time to see who is low. Even when you buy low, when it goes high, you are not aware it has gone up for you to take your profit. So there is always that, and those are the advantages of working with an asset manager or a fund manager. All in, I'm happy to be here. We are available at Redwood Asset Management, and so it's good to be here. Thank you very much. Bye.
Before you go, you haven't told us what you're investing in. Just one, mention it.
Okay, so I invest in equities, I've mentioned, but if you want to hear companies, maybe recommendation, is that what you'd like?
Just one.
Okay, just one. Let me look at it. I'll give you Naku.
Okay.
Naku, very good stock because it's growing very fast. The company is projecting 100 billion revenue in 5 years' time. So as far as revenue is growing, the earnings are growing, and the company pays very good dividend. This year they announced 2.55 kobo for last year, for 2023 financial year. Next year they probably could pay up to maybe 4 naira dividend. In 2 years' time, maybe 6 naira dividend. In 5 years' time, this stock may be trading at 100 naira. And for the average person who is on this call, I expect they probably don't have time to be monitoring market day after day. So they buy it and wait. So NACO will be my topic. Thank you very much. And I have it personally as well.
All right. Thank you. Thank you very much for that one. And to you, Mr. Abbas Akinsoya.
Thank you very, very much. So let me start with one thing I'm investing in. You said one thing.
Yes.
Okay, so let me pick one of our products that we offer at Zcrest. I invest in our flexible dollar investments. And apart from that, I invest across all our investment products in Zcrest. Our service and investment products that we offer at Zcrest. And I also employ would-be investors to download our Zcrest app to get more information. And most importantly, when you download our app, you can chat with the client service team and ask them that you would like to receive our investment or our research reports that we send out to our clients on a daily basis. I get reports from clients how helpful it has been and has helped them to also shape their investment objective and what they should invest in going forward. That's one. Then let me talk for 2 minutes. Thank you, Business Day. Let me use the opportunity to talk about what we do at Zcrest. Like you rightly mentioned, Zcrest Wealth or Zcrest Investment Manager is part of a financial services group, rated as the fastest growing financial service group by Popular Financial Times in 2022. And that speaks to the stage where we are currently at Zcrest. I mean, I tell people we're the next big thing in the financial services industry. And you will see, from what we do, we have an asset management business, which is Zcrest Wealth. We have a global payment platform. One of our associate companies is called Leatherback. On Leatherback, you can convert your currencies from Naira to USD, from USD to pounds. You can also use as a store of value, as it were. And beyond that, you can also use Leatherback to receive payment from anywhere in the country. You can also use to make payment to anybody, anywhere in this world, right? I beg your pardon. You can use to receive payment from anywhere in the world and also make payments anywhere in the world. Like I said, you can also use it as a store of value. You can also do your currency exchange on Leatherback. We recently acquired Van Merchant Bank Securities, one of the biggest financial service, an arm of the RMB group, or the first round group in South Africa. RMB Securities is now Zcrest Securities. So what that means is that you can buy your shares and stocks on Zcrest Wealth app there. You can buy a fixed income instrument on Zcrest Wealth app. We also have a company called Zcrest Global Markets, which is our dealer broker firm. That's a major and a big player in the fixed income space. We also have a lending business called Zadvance, which is into personal lending and business lending as it were. So I encourage all would-be investors to come on board and join the Zcrest family, and let's help you to grow your wealth and take you through that wonderful journey in investing. Thank you.
Thank you very much for that one. And to Ifeoluwa Adegoke, kindly tell us your last words as well as what you're investing in.
All right. Thank you for having me once again. It's been an insightful conversation. So I would say start, okay? Knowledge is useless when there is no action. So if you've not started and you're here today, just start from somewhere. If it's high yield savings you can do, if it is money markets, whichever one catches your interest, just start from somewhere. Start with 5,000, 10,000, whatever you can afford, just start. And once you make it a part of your lifestyle, trust me, it is a very rewarding journey. And it is one that I am very grateful I started about 10 years ago. So start and don't give up, be consistent. So make it a monthly bill, the same way you'd always pay for your power bill every month. Make it a monthly bill. If it is 5,000, 10,000, just keep pushing it there. You'll be surprised how far you go with more as you build more capacity with your income. So start and stay consistent. So what am I investing in right now? For me, I'm a bit biased towards the global stock markets right now. So I'm doing more of that right now. So I actually got a notification today that one of my assets went up about 12%, which I'm excited about. One of those days. So I've been quite interested in the semiconductor industry for like the past 10 months, and I've really been able to make a lot of money from there. So that's where my money is.
Okay. All right, thank you very much. Now, before we wrap up, I'd like to know how exactly can we reach out to you? I'll start with Ife. How can we reach out to you? How can we hit you up if you want to ask questions, any more questions? If we want to follow you, see what you're doing, how you're investing, how can we reach you?
All right. So on Instagram, at Money Talks with Ife. On LinkedIn, Ifeoluwadegoke, my name. You can also just search my name on like website, ifeoluwadegoke.com. My website will come up and we can connect. You can ask a question, leave a comment, and like I said, on Instagram, Money Talks with Ife. Yeah, got it covered.
All right, thank you very much. And to you, Abbas. Abbas, are you there?
Can you hear me? Yes, can you hear me?
Yes, loud and clear. How can we reach you?
Okay, thank you. Yes, I can provide, is it okay to provide my email address?
Why not? As long as it's good with you.
Yes, it's fine by me. My email address is abbas.akisanya@com. Abbas is spelled Akisanya. Akisanya is spelled AKINSANYA.
Can you repeat that?
Again?
Can you repeat your email address?
Abbas.akisanya@zcrest.com.
All right.
Abbas.akisanya. Abbas is spelled ABASS, and Akisanya is spelled AKINSANYA @zcrest.com. You can reach me via that email, and I'm also quite active on LinkedIn as well. Not on Instagram. I'm on Instagram, but I mean, maybe I don't know. Just to reach out to me quickly. I mean, LinkedIn and email will do for now. Thank you.
All right, thank you very much, Abbas. And to you, Olabode.
All right. Yes, I'm available on LinkedIn. My name Olabode Oduniga. I think yes, that's fine. Olabode Oduniga should do it. And for email, you could reach me info@redwoodaml.com. info@redwoodaml.com. You can reach us there, or instead you can reach me at olabode.oduniga as shown on the screen. olabode.oduniga@redwoodaml.com. Thank you.
All right, and Praise.
Okay, you can reach me on LinkedIn, Praise Wearable, just as seen here. Yeah, I think that would be the best place to reach me.
All right, thank you very, very much. And thank you so much for being here, availing yourselves, and speaking about what you know. According to a very great philosopher of our time, known as Lai Wasabi, he says, info, info. Anyway, I'm going to wrap up with that. And before we go, I would like us to take a little bit of a screenshot, if we can do that. I would have to ask my director if we can have a picture session. So just look into your camera and say cheese or say invest. Are we good to go? All right, thank you very much, and it has been great. It has been a pleasure talking to you. I remain Kemi Michael, and yes, this is Business Day. And let me tell you one thing about Business Day. Business Day is where you go to if you're looking for anything economy news, financial updates, whatever it is you're looking for when it comes to business. That's exactly why we're here. We're here to serve you and make sure that you're properly served with all of this information. Do well to reach out to us if you want to. If you have any interest in doing that, you can reach out to us via social media pages. And of course, you can follow us via our website. Do that, www.businessday.ng. Check us out, read our stories, get information for you to invest in your business, make your business better, grow your business. And of course, we have our conferences where we get to meet and greet and speak with industry leaders in different aspects. And guess what? You can also be part of that. All you have to do is check out our webpage, www.businessday.ng. And of course, follow us on all social media pages at businessday.ng. Facebook, Instagram, Twitter, LinkedIn, of course, or Twitter, now X, formerly Twitter, and us also on Facebook. Yes, we are also on TikTok. Yeah, we are. We're Gen Z like that too. Anyway, do well to follow us and get informed. We're going to have more events like this, and you know this, we make sure that you stay informed. Do well to have yourself a lovely day. It's been beautiful being your host on this event, Millennial Hangout. See you next month.